We're joined by Michelle Schneider. She's a chief strategist at MarketGauge. Michelle, thanks for joining us today. So just picking up on the NVIDIA bit, it's a blockbuster showing once again beating expectations across earnings, revenue guidance. How significant are the results as well as that Q4 guidance, especially amid recent concerns about stretched valuations?
Well, what was most interesting about the earnings was the conversation that Jensen Huang had afterwards and some of the things that he said about addressing directly an AI bubble, which of course he poo-pooed. And most of us thought that the AI bubble narrative was more for media scare than reality, because we all know AI is here to stay. In terms of the valuation, he also talked about the fact that they are completely sold out of their GPWs, and that's really basically the picks and shovels. So what's also interesting is a lot of those companies, like for example, Cipher Mining and Nebis, they are up even more than NVIDIA is in the after hours. So essentially, what you got from this is he's partnered with everyone. I mean, he talked about his partnership with OpenAI, Anthropic, they provide all the chips, Elon Musk and Meta, and now even Palantir, which I thought was interesting because Peter Thiel sold out of his NVIDIA shares the other day. So essentially the takeaway, right? So what's the takeaway from all of this? Is do we need NVIDIA in the game for the overall market? Yes, because the strongest sector has been the whole chip sector and the whole growth sector. And we did not want to see that collapse. However, is this the buy opportunity after a correction? That I'm not so sure. 195 is a good number in NVIDIA, but we've seen it over 200 recently. So I think you have to give it a little time for the dust to settle and maybe instead take that opportunity to look elsewhere, things that were hanging on for dear life that might actually now get a bid.
Yeah, Michelle, but I'm concerned about the geopolitical side of things. Those tensions are affecting chip supply chains as well as export controls continue to loom large. I mean, how exposed is NVIDIA's trajectory to policy risk relative to some of its peers?
Well, he had dinner with the president the other night, so I'm sure they talked about this. And I think that Trump, in fact, announced that they're selling 70,000 chips to Saudi Arabia and the UAE. So again, Jensen he said there was plenty of supply. So we'll see. I mean, it's really hard to guess sitting here, obviously, and not being in the inner circle. And that's all we have right now is price. So that's why I'm saying I would look to see what happens tomorrow, not just with those picks and shovel stocks that we talked about, but also with NVIDIA itself. If it can go north of 200, I would say that obviously the market's not concerned. If it starts to break down under 195, back down under 190 and can't clear 200, then I think there might be other concerns outside of what we heard so positively from Jensen today.
Right. And Michelle, this as we get a little bit more clarity on what was discussed at the Federal Reserve's October meeting with the minutes coming out. But at the same time, the first time as well, actually on record, October employment report, that's not going to be published due to the prolonged government shutdown. I mean, how significant is this data blind spot there for the Fed and markets as we head into that December meeting, especially as the latest FOMC meeting minutes actually show that many Fed officials, they expect interest rates to remain unchanged for the rest of this year?
Well, it's a complete opposite of NVIDIA, right? I mean, we went from clarity and assurity to complete opaque. And that's what the Fed is in a pickle right now. And they have been for quite some time, obviously, because they've had to weigh some of the recessionary factors we're seeing, like the labor market, versus the inflationary factors that we've seen, as you mentioned earlier, that we have not really seen CPI come down. But essentially, what they said was, we don't know what to do. I mean, there were some that said, well, a rate cut would be appropriate or inappropriate, others said. And then others said, well, we should just kind of keep where we're at. And others said, why don't we just wait until after we see the next unemployment report and then we make our decision. So maybe that's the most practical way to go, and we'll see. In terms of the rates overall, I think that, again, if we look at this administration and what they want lower rates. There are sectors of the economy that need lower rates. And so if the Fed had to choose, my guess is they'll choose the fear of rising unemployment and recessionary factors over inflation unless it really starts to rise, let's say, over 4%.
All right, Michelle, good talking to you today. Thanks for your time. Michelle Schneider, the Chief Strategist at Market Gauge.